Hey, Dan Fitzpatrick here, stockmarketmentor.com. And I want to go back and look at Snapchat. Over the last week or so, we've been looking at Palantir, which has done really well. And then I also covered Snap a time or two. But here's the thing, I got to tell you, this has been an awesome performer. We got this, I put this on my active trade list. And by the way, one of the things you get with Stock Market Mentor is an active trade list where now we've got 11 stocks on there, 11 trades going, where you get the entry, the cost basis, the stop, the rationale. The exit will raise stops as the stock works, or we'll just close it if we get stopped out. But you get that. Right now we've got 11 of them going. Every single one of them is profitable. So I hope that you decide to join us, even if it's just for a month. I think you'll be surprised at how much better you do. Anyway, back on track here. So I looked at this, I was looking at this, the way it was squeezing here. I got all kinds of boxes and stuff that we draw for our members. And then here, when the stock started to move up, you look at the volume. Okay, this was a pretty big volume spike. And that's after this massive institutional rush in. And so you got all these institutions buying the stock. The stock drifted sideways. And so then what you're waiting for, like there's no way this is not institutional buying with more than 100 million shares traded and the shares are at $70, $80. That's a lot of money coming into the stock. That's institution. It ain't Robinhood. And so then the stock stays steady here, more institutional support. And then what you're looking for is some signal that institutions are coming back. And so this is what we got last Friday. Get into the stock then, and then you see the stock boom. So it was down here on Monday. You think about this. It had closed here. It gapped down here over 3%, traded as much as 6% down, so that pretty much negated everything here. But then it came back, and the next day we're back up. So these are all signals. Like this is all an indication of institutional buying, institutional activity. They bought the stock here, and then the next day they said, well, hell, I don't want to keep buying it here. I'm bidding against myself. And so they take their foot off the gas. Stock comes back down a bit, not too much, and not out of the pattern. And why is that? Well, because they're buying the stock. And so price comes down, they're going to buy it. And then there's not just one institution that's buying Snapchat. There'll be several of them. Good fundamentals, good earnings. What's not to like about this thing? And seriously, what's not to like about this? The company's solid. Anyway, so you got multiple institutions wanting to get this stock, and they're not all gonna sit back and instant message or tweet, direct message each other and say, hey, let's not buy it yet. So instead, everybody's looking at it, and they start to dip a toe in. They say, well, we hope the stock goes down more, but we don't want to miss the boat if somebody else starts snapping up the stock, so let's go ahead and take a little bit more. So they buy a little more, and that's known as institutional support. Okay, so this was on Tuesday. Okay, well, wait, there's more. So then the stock once again gapped down and then ran up. Huge volume, more institutional buying. Guys, this is not hard. And by the way, it's not predicting. It's assessing, it's analyzing, it's looking at a chart. The things that I'm telling you are not complicated. They're common sense. But they're only uncomplicated and they're only common sense when you understand it, when somebody's explained it to you. So great, you can thank me later. So this is Wednesday, nice big move to the upside. Thursday, yet another higher intraday low, higher intraday high. Kind of like this one was to this one, and this one was to this one, and then we got this up here to this one, this up here to this one. So we have this series of higher intraday lows and higher intraday highs. Heavier than average volume. This takes us through Thursday, and then what do we got tomorrow, meaning today? Boom. This is the biggest move here. A huge move, almost 30 million shares traded, and then you look at this and say, well, shoot, man, I think this stock's just going. I think this is going to continue to move. And you look at it on the weekly chart, guys, what's not to like? What's not to like in this stock? This is the kind of thing that you can build a pretty big position in over not that long a period of time. And the reason I say that is because of all these different support levels. So you're buying some, and then you're treating that as a separate trade, and then you're putting a stop in to protect that last buy. And then if the stock pulls back, you go, crap, okay, I got stopped out of that, but you've still got your position. What you're doing doesn't impact the stock. What the stock does impacts what you're doing. And so and what I just said, it's really important. And then when the stock continues to go up, you do it again. I bought this 3 different times today. 3 different times I added to my position. Each time, staggered stop. Each time I put a stop up to protect that. So anyway, you can be doing that stuff too. Again, this is not hard, but it just takes some thought. Turn off the idiot box, put your phone down, and really do some thinking while you're looking at this chart. And you can see this stuff too. So anyway, that's all I got for you now. One thing though, next week, you're going to start getting some emails about, I guess I would call him my protege. Yeah, that sounds good. I've always wanted a protege. My protege, Scott McGregor's course on swing trading, it is a complete program. It's not just, golly gee, here's a swing trading course, buy low, sell high. I mean, he really gives you some good stuff that you can put to work right away. So just watch for that email. I can't sell you anything now. I'm just giving you the heads up that come next week, we're going to try to sell you. All right? Have a good weekend.